This is the dollar yen on the 15 and I'm involved with the head and shoulders. I'm going to run through the higher time frame analysis and show you why I'm looking at the market having a short reversal. So here on the dailies, we clearly had a big bearish day yesterday, a big red lower low lower close candle, and we have just not quite come into this psychological number, the 10800. Now if we go down to the 240, you can see that we've been moving quite nicely here, move lower, pull back and move lower. I would be expecting, well, I will be waiting for a pullback to this outside return, in particular to this level of structure right here. Now I'm just going to throw on an AB equals CD pattern as well, like this. Oops, let me redo that. And we have gone past this AB equals CD pattern, so that is no longer valid for me. Let's go and take a look at the 60, and here on the 60 you can see that we have just above this minor level of structure put in a couple of higher high, higher close candles. And I'm just going to go ahead here and put a structure level on the hourly and look left, and we actually have to go to some historic structure levels to see what I'm looking at. It's a zone where we can see a reaction. I get the feeling I may have gone past it. There's one small reaction there. Was it on the 15? I think, guys, it may have been on the 15. 1 second. Let me do this again. It is here somewhere. We had a few levels. Yeah, it was on the 15. Okay, so a few minor tests here, wicks, and then here, small reaction. Okay, nothing big, small reaction, but small reactions. And particularly since we've had quite a bearish run here, we have this that is now set up. So we have our level of structure that I would expect the market to retrace to would be this level up here. And in terms of this head and shoulders, then we have a move lower, the left shoulder, the head, and then up here we have violated on the 15 and the 60, giving us an initial structure high. And then what we had just here, this 15-minute candle, was a higher high, higher close. So we saw a pullback, and I'm looking for a move higher. If I bring back on the orders, I've got my stop below the head, 5 pips below the head here. There's no other structure area here to put my stop in a safe place. And the head and shoulders then does look like that. So in terms of risk then, we're looking at 26, and in terms of reward, looking at 43. And if you look, I am actually front running my order by a couple of pips. So because we're moving very directionally and heavily here bearishly, I'm only looking just to come up and tap the wicks here. So I am front running by a couple of pips for that reason. And we are back for the update, and this is a losing trade. It was not for 26 in the end, it was a little less. And I've been punished this week and the back end of last week, if I'm honest, with trades. Seeing a drawdown now as a result of the wins over the past few weeks. But this was the initial structure high, the pullback. But look at what we did here. Look at the clear battle that went on for a long period of time. I've just mentioned this in one of the other videos, but we're looking for areas where we're going to see a reaction. We clearly had the reaction. Look at the battle that went on. Unfortunately, this one lost. In the end, I was able to implement risk management and get stops just below the double bottom retest here, so I was out for minus 16.